It's Friday, which means a fresh market review. First, the check against last week. Last time the takeaway was the market's in a chop, no setup. But if the mid-time frames lock above zero like in May, an early long scenario opens up. And it chopped all week. Bitcoin even dipped to 58,000. And the last few days since July 1st, the mid-time frames pushed above zero. Exactly that scenario. That's what we're breaking down today. For the first time in 8 weeks, I'm showing you not a continuation of the drop, but the possible start of an uptrend. Possible is the key word. The signs are early and unconfirmed. I'll show you where they are and what exactly could break them. For new viewers, a quick word on timing. There was no scheduled Fed meeting this week, but the BIOS time rhythm is visible without it. On Wednesday, the Fed chair softened the tone on inflation. On Thursday, weak employment data came out, and it was that midweek institutional node that turned the move. Not Friday, not Sunday. Tuesday through Thursday, that's where the flows form. Wednesday's the climax, Thursday's the reaction. Friday's when you take stock. That's BIOS time, a sync system built around real money, not the public calendar. On to the market. Here's the frame. Up top, structure turned its nose upward, but the confirmation is coming from below, from the lower time frames. The weekly 5-day and 3-day charts barely changed from last week, closed a touch higher, didn't break a local bottom anywhere, pointed up, though the higher ones are still below zero. That's the backdrop. Now the daily chart. This is where it gets interesting. A DP and trend dominance are moving in to attack the zero line in sync. And that's fundamental. When one outruns the other, that's a desync. The move has little chance. When the attack goes in sync, the chances of a break are noticeably better. Sync is exactly what we want to see. The 12-hour chart adds a nuance. Trend dominance is outrunning ADP, while ADP is still printing a weak close at zero. But the setup's good. If the 12-hour chart closes stronger on trend dominance than on ADP, that's a signal you can consider long setups. Reach is leading price. But ADP has to stay above zero too, otherwise it's a false breakout. The 4-hour chart confirms, since July 1st, several closes in a row above zero. ADP not letting price under the line, trend dominance running to 86 and higher. The 2-hour chart, same thing. ADP tag zero without a single breakdown, trend dominance stronger on the touches. And the 1-hour chart's been above zero since July 1st. ADP's runs poke at the line and pull right back. Yesterday there were millimeter dips, but trend dominance held higher the whole time. The chop continues, but now with a sign of breaking upward. Now Bitcoin separately. It's in sync with the market. The picture's almost a mirror. The weekly and 5-day charts didn't break a local bottom, closed a touch higher, looking up. The 3-day chart is passing through a mirror level. Historically, it's usually support, and right now it's acting as resistance. We'll see how Bitcoin clears it. The daily chart is approaching the attack on zero, literally 1.5% left. Careful here, on the attack, false breakouts are possible. We factor that in. The 12-hour chart pushed above the zero line and is holding for 3 or 4 closes, but without a clear surge, so either we wait for a lock-in or it's a false breakout. Carefully. The 4-hour and 2-hour charts are above zero, holding well. The 1-hour chart approaches to zero almost without touching, came up and returned higher. The same chop, but with the same good sign of breaking out as the rest of the market. And now the main thing, that early start of a trend carried into the setup of the week. The setup is trading the whole market with group orders, a scalp for the brave. Why for the brave? We caught an early moment of sync. The 4-hour chart is green above zero, while the 12-hour was red and only just turned green. That's a first warning bell, not a confirmed trend. The sync rule we use. The 4-hour and 12-hour charts both green, the long side, both red, the short side. Different colors, no sync, the trend could be false. Right now they're only just converging into green, So the long is strictly a scalper's play early. We don't step in with a full position on an unconfirmed market, but we don't sit completely out of position either. Technically, the 4-hour and 2-hour charts give the signal with a delay, so for the scalp, the anchor is the 1-hour chart. We wait for a run to the 0 line. If there was no dip below and no new local bottom, and trend dominance confirmed strength on that run, we enter long and lock in fast, not lingering. And separately, don't short from the upper line here. Inertia can pull it up. The picture right now is a long one. What to watch from here? Confirmation of the early scenario if the 12-hour chart closes stronger on trend dominance than on ADP but stays above the 0 line, and the one-day chart attacks the 0 line with conviction and holds. Then the sync is confirmed and the long side strengthens. What breaks the picture is if the 12-hour chart returns below 0 and the daily attack on 0 fails. The 1-hour chart will show it first. It'll go below 0 and break its local touches. That's the signal to stop. From there, either a lock below 0, the short side opens, or a false dip, a return above 0, and we keep scalping longs. We don't step into a full position until there's clarity on the daily and 12-hour charts. That's it for the week. All the indicators I showed today, trend dominance, ADP, the screener, are available in real time on the platform. Link in the description, free, no card needed. See you next Friday.